One man caused a 300-point drop in Tesla's stock price last week is our story for today. As usual, we have our health tips. This is kind of a two-point. This is Greg for Teslafaninsight. Thanks for joining us once again. If you're a first-time visitor, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters as well as our subscribers. Please like and subscribe if you enjoy the show. What happened is that we did a kind of a 1.0 show based on a Reddit piece, and we'll be putting the piece link under here. But what we wanted to review is the fact that, what our plan was is to follow up with the first show about this and only do it for Patreon supporters. We're doing an extra 2 or 3 shows a week. If you're below $20, it's 1 extra show. If you're in the $20 and up category, it's between 2 and 3 extra shows per week. So I was on my way to doing our first private show of this week and realized that the plunge in Tesla's stock price has affected all of us dramatically. And we've had a lot of interest in options and other things. And therefore, I wanted to sort of dive more deeply. I wanted to note that this show format is a little bit different because I'm going to be reading something to you and then commenting on it, which is something we usually don't do. You really want to have screens behind you with the text and all that stuff, and I don't have that access to that because I'm on the road. But I think that it's really important information, and so therefore I'm choosing the format I'm doing it. So don't flame me based on structure. It's a temporary phenomenon that we'll have fixed. The other note I want to make is that in some cases what I read has technical terms related to options trading, and don't worry about the terms, just get the meat of it. And if you have any questions on terms, you can put them at the bottom of the show, and then we can review those later. So I'm going to read 2 paragraphs to you real quick, and then I'm kind of pick through, and I hope those of you who are live can also ask questions there, and I can field them for you. So for this section of the post, it says Tesla releases Q4 and the stock jumps again. Now XYZ buys 200,000 shares of Tesla. XYZ and other institutions are now continually buying shares to hedge their bet against people like Fred. Fred, in this case, is the person who they were battling against. Fred, just in case they can give him his 1 million shares below market value. Ironically, this is happening to such a large extent. This hedging causes the stock price to rise again and causes XYZ to buy even more shares. They're now caught on a positive feedback loop where this call hedging plus shorts covering is causing Tesla to skyrocket, gaining more and more each day. Now it's Wednesday, which is this past Wednesday, and Tesla is shooting up over $200 gain in one day following a $100 gain the day before. Poor XYZ has only bought 300,000 shares, but come Friday, they're going to have to sell Fred 1 million shares. They now know they're looking at a $750 million loss to Fred, but maybe even worse, if the positive feedback loop accelerates, the losses could be even greater. So they decide to illegally force Tesla down. The problem is that if they do it for more than 15 minutes before close, it will trigger a rule that will prevent them from continuing the next day. So 13 minutes before close, they borrow 2 million shares and sell them for lower prices than they're worth to immediately stop Tesla's momentum and drive the price down. They know lots of nervous Tesla shareholders set limits in the 900s to lock in their gains. And so they can start a reaction where those investors will automatically sell and the price will drop under 900 a share. So I wanted to note to you that a bunch of you guys have what are called stop losses on the sell price for your shares. Well, it turns out, obviously, you can hear here that you can use stop stop losses as a way to force the stock to that price. And then all of a sudden that triggers a whole bunch of sales that further causes a stock price to drop. Fortunately, XYZ has also ties with MarketWatch. So they also get an article published with the false headline, Tesla negative for the day, within the 13-minute window, even though after the $80 manufacturer price drop still left Tesla positive for the day. They know the bots are programmed automatically to sell on headlines like this, so it's a wonderful technique. And of course, the article can be removed minutes after trading, no harm done, right? So what this talks about briefly there is that there are these trading bots that watch what's happening. So what you'll notice on major news on any stock, especially and including Tesla, when there's certain news that hits that headline, the computers are taught how to, using AI or artificial intelligence, immediately sell shares, and that can actually trigger lower price moved. Now, early yesterday morning, they can sell more shares in the small German index and drive the price down further very easily and spook lots of investors and cause everyone to sell and drive the price into the 700s. Now, slowly, they can buy back the 2 million shares at 750 that they borrowed at 950 and make a very nice profit of $400 million. On Friday, Tesla will close at 748 and Fred will get zero. XYZ pockets Fred's 150K and they win again. They know there's no risk because the SEC never prosecutes stuff like this. So I wanted to, there's more to it, the Reddit post. I have the post on the previous show to this one. I just wanted to walk you guys through this because part of our goal is we want you to make money, and we also want you to make money while understanding how the market operates. So my command of trading, and I haven't heavy traded in about 8 or 9 years, is just the fact that you can, so one of the if you want to make some quick money, what you can actually do is you just heard about them pinning a stock below a certain price point. And what I've been covering as Tesla's gone through this period is how if you can anticipate the price point the big guys are trying to get the stock down to, you can actually buy puts and make money on their thievery. So this is part of the backdoor of what I've been trying to teach folks when we do these private sessions. And so you might want to sign up for one of our sort of how options work trading classes, because it's mostly an insurance product. But as you get good at it, you can dive in and start going after the big boys when it comes to making money on options in very creative ways. What this also shows, and we've discussed this numerous times, is how there's a phenomenon where there's a large number of institutions that have agendas, and because they have the ability to use things like MarketWatch, to use things like other markets we do not have access to, they're then able to get things rolling in an interesting way. When you look at the folks who are on our show and that we've been hearing back from, et cetera, I'm really impressed that a lot of you have done very well on Tesla and other stocks and have decent sized portfolios. I wanted to highly, highly encourage you to consider, if you have more than $1 million, especially if you have more than a $2 million portfolio, you get access. A lot of you are doing E-Trade or Ameritrade, and you started with a small account, sub $1 million, and now you're in the $1 million, 2, 3, 4. I wanted to encourage all of you to at least interview 2 big firms. That's like JP Morgan, Goldman Sachs, it could be Morgan Stanley, any of the big firms. And the reason is that once you go past a certain number in net worth or shares that you have sitting there, you enter a special realm of access to services for free because they want to have your money or stock or whatever parked at their firm. And so you don't have to make the switch entirely. Perhaps it's just a portion of your portfolio. But I think you're doing a disservice to yourself One item that pops to mind in that regard is that if you notice there, they talked about how they used a small exchange in Germany to start the ball rolling in terms of dropping the stock price. Well, as you get with your financial advisor, one of the options you're going to have is to jump out of the US market to set up trading positions in other parts of the world. And this will enable you to start making money in those markets and not necessarily just have to be focused on the United States. We had a recent question from one of our folks on our show about aftermarket and after hours. And one of the challenges is there's a lot of action in those after hours that institutions participate in, or you also have activity going in other parts of the world. So if you're able to have a partner that gives you global access to trading, you now have the ability, if the news is what you think it's going to be, to go ahead and trade heavily in the aftermarket, but possibly in other markets. And this is one of the benefits comes from dealing or working with one of those big firms. And you lose out on that if you only stay at E-Trade or Ameritrade and trade your account without realizing that as a big investor, you have access to global resources of some of the best firms to help you identify and execute trades effectively. The next thing I wanted to, and perhaps the last thing I wanted to focus on, because unfortunately we're low on battery here, is just the idea that, Market Watch and some of the news agencies, as you watch them, how they handle news on Tesla, it's very obvious when you have a negative news cycle going from one place to the other. And that's news to me, how the bots work on that news, that we could see an analyst announce negative things on Tesla, and then we could watch the services pick that up, and then you can watch the stock price drop. I thought it was related to just traders actually trading it, not that the bots had been programmed to carefully get rid of, offload as many of those shares as they can, therefore forcing the stock price down of a company as well. So there's a lot to this. We sort of read you through this instead of just putting, we wanted to get this out to a broader audience than just our Patreon supporters. But this is a reminder to you that I want to encourage you to get onto Patreon just for a month. The $20 level gets you at least 2 extra shows every week. And I think you'll find that there's a large amount of value that you'll get out of that you're missing out on if you don't, including the fact that the post that I'm working off of right now, we got this information 2 days ago, and we're able to put it out to our Patreon folks. And all of those that were not on Patreon didn't get access to this information. So as you prepare for your management of your own portfolio and nervousness about what Tesla's been up to, understanding what's behind some of the things that are occurring that are non-relative to good fundamentals could be a big difference maker in your thought process. Any rate, I just one last, Graham pointed out that Corona will cause a significant market correction. I do believe Corona will be big, but I think, as I shared before, Corona will cause people to move towards Tesla because of cost efficiencies. We're down to 5% battery here, so I got to jump off. Don't forget, don't go to bed within 2 hours of eating, preferably 4 to let it digest. This is Greg for Teslafaninsight. Tschüss, macht's gut, au revoir, lehitraot, choda hafez. And we look forward to getting back with our next show. Join us on Patreon. I think you'll be very happy. Have a great day, and thanks for joining us today.